Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 17th COT report in 2015, and as usual we're going to start off with the changes in commercials positions. So here we go. As you can see, we've got Oats on top of our list with a 27% change in commercials positions, a bit larger 32% change in large speculators. You may see on the graph that these changes are very large changes. They may actually be the largest changes in the past 52 weeks, so they're considerable. Of course, these are bullish COT change signals, and we can also state that commercials have gone back to net long territory, while large speculators have went to net short territory. Opening a 5 years chart, we may see how extreme Oats has become, and it's easy to tell that we are at a very significant bullish COT Extreme level currently. I'm trying to show you these places in time on the chart when Oats was so extreme. Actually, not long ago we had such a bullish COT Extreme, but if you look at the chart, it didn't really have an effect on price. And since then, the extreme widened even more, while prices, of course, declined. So, but anyhow, it's a good market, and the signals are pretty obvious. Both of our signals are bullish. I advise you to keep your eyes on Oats. Our next market is Nasdaq, where we can witness a 23% change in commercials positions. Here, this change size is not that surprising. We see such changes pretty often in the last 52 weeks. It's a bit larger than average, no question about that, and of course it is a bearish COT change signal. Opening the 5 years chart, here we go. You may see that we're getting closer to bearish extreme levels, but we've still got a little bit of space left. But having prices at these levels, we are not surprised at all to see the extreme widen towards the bearish side of the market. Sugar is our next market with a 19% change in commercials positions. The change here is pretty large, bearish, and basically both commercials and large speculators are very, very close to the zero line, or we're close, and just with this report have moved away from it. Are actually moving away from bullish COT extreme levels if you look at the chart. Now you may see a bit of a rise in prices, so we shouldn't be surprised. The big question, of course, would we see the continuation of this rally in the upcoming few weeks or even month? Because if you look back in time, we had a similarly large COT extreme a few times, and the effect didn't last that long. So judging by that, I would recommend you to be very cautious with such a trade. But anyhow, the extreme was there, and it's still the commercials and large speculators are actually still very close to these levels. So the wider term picture does support further rally in sugar market. Let's move on and have a look at large speculator COT Extreme, and here we go. You may see that we have three markets with all-time COT Extremes. Of course, two of these are wheat markets, the Kansas City wheat and the Chicago wheat. Let's start off with the Kansas City wheat, where we have all-time COT Extremes both in large speculators and commercials. Of course, we're not surprised if you were watching last week's review. We were already talking about this extreme. It basically widened as price declined even more. Of course, we need to repeat that these COT all-time extremes may be present in the market for some time before they really take an effect and prices start to react to it. So it's an unquestionably large COT extreme. I'm just going to show you the larger extremes in the past 5 years, and it's definitely a market to be watching. Rough rice, all-time COT extreme over there. Again, a market that we talked about last week. Not as obvious because if you look at the chart, we were very close to this level for quite some time without any reasonable reaction from price. But anyhow, the extreme is there. It is all time, and it's an unquestionable bullish picture that we have in rough rice, no question about that. And then the Chicago wheat with an all-time COT extreme only in large speculators positions, 30 report extreme in commercials. It's again pretty obvious that the extreme is there, and if you look at the chart, we do see an effective reaction from price to these extremes. Of course, there's a significant correlation between the Kansas City wheat, so I may not be able to tell you that much more over here. But anyhow, it's another market that you should be evaluating in the next few days or even weeks. And last but not least, let's have a look at the natural gas with 213 report extreme in large speculators and an all-time COT extreme in commercial position. So there's a bullish COT extreme, and there's no question about that. Last week we had a beautiful rally, as you may see on the chart. So maybe we have reached the bottom. Of course, it's difficult to tell. Time will tell. But the extreme is there, and I think it's a very nice opportunity that we may need to analyze closer. Okay, that is going to be all for this review. If you'd like to have a look at the COT charts, you can do so on our COT charts page. But if you'd like to have a more in-depth and detailed COT analysis, of course, this is the page you should be looking at. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.